Feeling like the market is in complete chaos right now? Well, in the next few minutes, we're going to break down a playbook for how to navigate all of this with confidence. And it's a strategy that's built on history, on data, and yeah, a little bit of nerve.
Look, if you're feeling anxious about the economy, you are definitely not alone. It honestly feels like a perfect storm is hitting us from every single direction, and it's creating this massive amount of uncertainty.
So first, economists are starting to throw around this word stagflation. This is a really rare, kind of worst of both worlds scenario, where you've got this stubborn, high inflation, and it crashes right into rising unemployment and a slowing economy. It's not great.
At the exact same time, you've got all these ongoing conflicts, especially in the Middle East, and they are having immediate ripple effects. We're talking about disrupting shipping, blocking oil supplies, and of course, sending gas and energy prices through the roof.
And all of this, unsurprisingly, has led to a pretty significant market pullback. Now, seeing your portfolio drop 5% or more off its highs, that can be really unsettling. But it's so important to remember that pullbacks just like this are actually extremely common. Now, what's really fascinating about all this is that while the reasons for the panic might feel unique this time, the panic itself, it follows a very predictable pattern, and understanding that pattern is the key to not falling into its trap.
This right here is the emotional roller coaster that causes so many people to buy high and sell low. You feel like a genius on the way up, right? But the second it drops, anxiety and fear just completely take over. You end up selling at the bottom, turning a temporary paper loss into a permanent one, only to watch the market recover, and then you buy back in after the biggest gains have already happened.
And history shows us again and again that this cycle just repeats itself. I mean, major downturns are a regular, if pretty painful, feature of the market. From the Great Depression to the COVID crash, these scary sell-offs have always been part of the journey.
But, and this is the crucial other side of that story, after every single one of those crashes in history, the market has not only recovered, it has surged to new all-time highs. Just look at 2008. A terrifying 50% drop was followed by a 193% surge over the next 4 years.
Okay, so let's get to the antidote. Let's talk about how all this history builds into a simple but really powerful strategy to break that cycle of panic.
This quote from Graham Stephan really just captures the whole philosophy. The goal isn't to perfectly time the market, it's not to react to every scary headline, it's about having a disciplined, long-term approach that just ignores all the short-term noise.
And the playbook itself is surprisingly simple. Pillar 1, live below your means and save aggressively. 2, invest that money consistently every single month, no matter what the market is doing. 3, diversify your assets so you don't have all your eggs in one basket. And 4, this is the hardest part, do not panic sell when things look bleak.
And this is a perfect way to think about that aggressive savings part. Even after making millions, the mindset of stretching a dollar stays with you. When a huge commission check is still viewed as just a lot of gas money and sandwiches, it fundamentally changes your spending habits. It makes saving the default, and that's the foundation.
So, the crucial point here is that this playbook isn't based on hope or wishful thinking. It's based on decades of cold, hard data that shows one thing very clearly: patience is rewarded.
Let's just look at geopolitical crises, like the ones sparking fear today. Well, data compiled on every single major geopolitical event since World War II shows that, on average, the stock market is actually 5% higher just 6 months after the event. The initial panic is almost always a short-term overreaction.
Or how about political uncertainty? Midterm election years are historically the most volatile, with an average pullback of over 17%. But here's the kicker. In the 12 months following a midterm year bottom, the stock market has never closed lower. Not once. In fact, the average return is over 31%.
And if we zoom out even further, like way out, over the last 100 years, the market has finished the year with a profit 73% of the time. Yeah, there are losing years, and some of them are absolutely brutal, but the overwhelming long-term trend is undeniably positive. So this all leads to the one strategy that has proven itself successful time and time and time again: buy and hold. It's the simple, almost boring method of buying quality assets and just letting them grow for decades. And it consistently outperforms people who try to jump in and out of the market.
Okay, this brings us to the single most important takeaway in all of this. It's really a shift in perspective that can turn a moment of total fear into a moment of incredible opportunity.
It's probably the most famous investing quote for a reason. When everyone is panicking, when they're selling everything, that is the moment of maximum opportunity. Market downturns aren't a crisis to be survived. They are a sale. It's a discount on quality assets. These are the times when future wealth is built.
So I'll just leave you with this question. Missing just a handful of the market's best days can absolutely devastate your long-term returns. And the thing is, those best days almost always come right after the very worst days. The data is clear, but having the discipline to stick to the plan, that's what separates successful investors from everyone else.